Good morning, folks. It's that time again. This is the Satori Traders midweek precious metals news. Here's gold in the monthly time frame. Really nothing to see here. We're finishing out the shoulder of that head and shoulder pattern. Yes. In the weekly time frame, we can see gold is showing some strength last week, and this is the current week's candle we're looking at. And obviously this morning we got some nice positive action, bullish action in the metals markets this morning. Here's gold in the daily time frame. What'd we get overnight? 20 bucks, 19 and change. So that's nice action in gold overnight. 20-day moving average acted as support. Price is still dealing with a lot of resistance here at the 200-day and 50-day moving averages, but very nice action this morning. MACD rising up into, let's expand this. So rising up towards bull mode, not quite there yet. We've got one indicator above zero. The other one should follow shortly. Energy rising and already elevated. So nice action in the precious metals. That's gold. Silver in the monthly, no changes there. Flagpole, flag, halfway point of that movement gives us a target at $40. Silver in the weekly time frame, this overshoot to the downside, you have to decide as a trader, speculator, investor, how you're going to manage that kind of thing. Not uncommon in markets these days to get overshoots to the downside. At this point, I'm assuming that that's what this is. This is an overshoot to the downside. We have to acknowledge that one of the ways that the whales, the big players in the financial markets, one of the ways they ring the cash register is by intentionally moving the markets through the stop of other traders. They know where the stops are. They can do technical analysis, and they have enough firepower. They have enough capital at play that with leverage, they can, for short term, they can move the markets pretty much anywhere they want them to. So anyway, that's my current take on that in the weekly time frame. That's just an overshoot to the downside. Here in the daily time frame of silver, we can see we got the same bullish. That was last week's bullish action there. Now we've dealt with this level as resistance, and now this morning we're seeing we've got a nice bullish push up through resistance level, albeit now we've got resistance at the 200-day moving average to deal with. So anyway, nice action in silver. MACD on a buy signal at a very oversold level. So notice that, MACD turning up again from a oversold level, energy rising. So good looking in the physical metals. Here's our mining stocks. I've been using GDXJ in the weekly time frame as my proxy for the mining stocks, and had labeled this as a double bottom. We got this nice rise, and then we've been in this downtrend for the last couple of months, which hasn't felt good, but it is what it is. And now last week and this week, potentially we're getting a resumption of the uptrend. This double bottom has now morphed into potentially a triple bottom. I've got question marks on that. From a strictly technical point of view, this low point is a few pennies lower than these lows. And so technically that is a new lower low. Well, and look at that, that's a lower high. So technically we could look at this as still being a downtrend in the mining stocks. A lower high, lower low, yeah. So anyway, that is not my perspective, but that's a new observation for me this morning. Let's see, in the daily time frame of GDXJ, we've got some nice bullish action going on this morning. We've opened with a gap higher, energy rising sharply and already elevated. We're on a buy signal. Let's see, we got resistance at the 50 and 200-day moving averages to deal with overhead. So, and this resistance zone in here. So nice action in the mining stocks. We got some work to do. Let's see, SIL, we got the same behavior in GDXJ, but it's more obvious here in SIL. So based on last week's bullish action in the physical metals, we got this big pop this gap up in the silver mining stocks, and now we've had a pullback to test the breakout level support, however you want to look at that. And then yesterday I was pleased to see this bullish candlestick forming in SIL. Apologize for messing with your eyes there. And so notice that this candlestick, not only is it fairly wide ranging relative to those last three bars, we can think of that as a wide ranging bar, and it has closed, let's see, the close was at 42.27 and the high was at 42.28, looks like. So it's closed a penny off of its high of the day. And so anyway, that is a very bullish candle coming after a 3-day pullback to an obvious support level, and now we've got this bullish gap higher. So anyway, nice action in SIL, the silver mining stocks. So the dollar in the weekly time frame pushed up into the median line of this Andrews pitchfork, which was also this resistance zone that we've been expecting based on this prior high. We can assume, or I've been assuming for several months now, that this area would be a resistance zone. The dollar got there. And so sure enough, here's the dollar appears to be turning lower from that resistance level, median line of the fork. So, and yet we can't say that in this time frame the dollar is in a downtrend, because it isn't at this point. So a little bit of mixed signals in the dollar depending on what time frame you want to look at. So here's the US dollar in the daily time frame, and we can see that we got a decisive break lower last week. The dollar clearly fell out of this channel, dropped below any support that we had along this median line extension, and now is dealing with support that has become resistant. So here in the daily time frame, this looks more like the start of a downtrend, or potentially the start of a downtrend, and yet it could just be a pullback to test support at 50. So I'm mixed thoughts about the US dollar at this point. Here's the yield on the 10-year note in the weekly time frame. So big movement last week, and that kind of blows out my operating premise for the interest rates. I've been assuming that the long-term trend is up, that the primary trend is up in this time frame, and I'm starting to question that. Here in the daily time frame, I was looking at this morning and thinking about the sentiment in the markets. And so clearly back here, this was early 2021. So, coming out of January in through March, the narrative, the market sentiment was reflective of economy's going to reopen. And not only is the economy going to reopen, there's a risk of economy overheating. And so interest rates were rising sharply in that environment. Something changed. That's end of March, and so April. If we're strictly making prognostications based on the interest rates of the 10-year note, something changed in here. And then, in my opinion, we got another change. What's that? That's June. Started June. Something changed yet again, and possibly this latest change was an awareness that not only are economies not reopening, they're actually headed back into lockdowns. And we've seen that Spain and France have both instituted mandatory vaccinations along with vaccination passports. If you've noticed the tremendously increased rhetoric from the U.S. talking heads just this week, that clearly we're ramping up the pressure on getting the unvaccinated vaccinated, and this global lockdown is becoming more obvious. So, and then it also crossed my mind, markets. One of the concepts on markets is that they look ahead. They price. Today they are pricing into what they foresee 9 months in the future. Something. That's the idea. And so potentially the change back here in spring was the markets, the interest rate market, looking ahead and realizing that this is what we were headed into, that, you know, this was going to be the reality, and the market was reflecting it all the way back here. But, you know, that's just me babbling, folks. Let's move on to the equities. So this is SPX in the daily. That's mislabeled. Excuse me. That is the daily time frame. Yesterday we got a nice big bullish move, and like I was saying, this bullish candle. So notice that the price closed almost on the high of the day, and so that's always a bullish indication. This morning we're not getting much follow through yet. MACD flat, energy elevated. In the Dow, so Dow, for whatever reason, not able to press higher. You know, we made this high back in, that's May 10, and have yet to decisively better that level. So in contrast to both SPX and Nasdaq, which have pushed higher from, let's see, where's May 10? Let's see, May, June, holy cow. May, yeah, so there's May 10 in the Nasdaq, and look what it has done since. You can see that there's May 10 in there somewhere, yeah, right there. So there's what Nasdaq has done in contrast to the Dow, which has done nothing more than basically bump sideways. So Nasdaq has opened on a bullish note this morning. Looks like we got some positive action, you know, still very overbought. All of the equity markets extremely overbought. Energy is elevated. Brent has done a big pullback. So there's some, I've seen headlines, machinations in OPEC plus, and so I don't follow the oil markets very closely, but based on this chart, obviously there's volatility in the oil markets. So, and a lot for them to respond to. We've got changes in the dollar, which affects all commodities, including Brent. So anyway, a lot of winds blowing oil prices around. Here's Bitcoin. So we got last week, this was, you know, we got a short covering rally. There were about, God, what did I see? I think it was 900,000 Bitcoins, shorts that were covered, that created that bullish movement. And note that that's also counter trend, because Bitcoin has been in a technical downtrend for weeks, 2 months. What is that made? June? Yeah. And then so potentially this is nothing more than a counter trend rally after a 2-month long downtrend. So I was already skeptical of this movement, and then realized that it was, you know, coincidentally, this was Sunday night, Monday morning, and we've got Elon out there talking about, you know, unicorns and Skittles and Bitcoin, and then we get that in the markets. And so far we haven't really gotten any follow through on volume or in price. So sideways action, you know, on a bullish case, we're consolidating prices, consolidating this bullish movement. We're finding support along the 200-day moving average. We're gathering energy prior to our next movement higher. That's the bullish case for Bitcoin. MACD, now we've got both indicator lines up above the 0 level. And so based on our MACD indicator, that's bullish. That's bull mode for MACD, which suggests primary trend is upwards at this point. Energy is elevated. So if Bitcoin wants to push higher from this level, it's certainly got the ability to do so. So we'll see whether the market wants to do that or not. Let's take one last look at the metals. And so we've got a pullback. We got that nice bullish action out of the gate this morning, and now as the other markets have opened, we're at 7:05 Pacific Standard Time, so 10:05 Eastern Standard. Now the other markets are open, been open for half an hour, and we've got gold pulling back and dealing with resistance at the 50 and 200-day moving average, which isn't surprising. So silver, same thing, pullback stocks, mining stocks, you know, pullback. Anyway, it's all good, folks. Have a fantastic day, and I will see you in the Sunday update.